South Korea is now legally required to formally review a proposal to scrap its planned crypto tax. A national petition, which calls for either removing or revising the tax, has crossed the 50,000 signature threshold. This threshold is the minimum required for lawmakers to formally consider objections to the tax framework. The petition has gathered more than 52,000 signatures in just 8 days, a development that has triggered the Finance and Economic Planning Committee to take notice. The tax in question is set to take effect in January 2027 at a rate of 22%. Originally planned to begin in 2021, the tax has faced repeated delays due to backlash from industry stakeholders and concerns about its impact on investors. The tax is now set to take effect in 2027, but the petition's momentum suggests that the timeline could change. The petition's authors argue that the tax is unfair because it treats crypto investors differently from other asset classes. They claim that taxing crypto gains at 22% while offering preferential treatment to other investments undermines Korea's competitiveness in the global crypto market. A central point of contention. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Is the disparity with stock investors in South Korea, who face capital gains taxation only on profits exceeding 50 million won. This threshold is far more generous than what crypto holders would face under the proposed tax. The petition's timing is significant. South Korea's crypto markets have been in decline. The total value of crypto held by South Koreans dropped from about 121.8 trillion won, $83.3 billion, in January 2025 to about 60.6 trillion won, $41.4 billion, in February 2026. Daily trading volumes on the 5 largest exchanges, Upbit, Bithum, Koinon, Korbit, and Gapax, also fell from $11.6 billion in December 2025. This decline adds pressure on policymakers to reconsider the tax. The petition argues that the tax could further depress market activity and discourage investment in crypto assets. The Finance and Economic Planning Committee is now required to formally consider objections to the tax framework. This means the government must respond to the petition in a structured way, which could include revising the tax rate, delaying implementation further, or even scrapping the tax entirely. The committee's response could take weeks or months to materialize, but the petition has already created a sense of urgency among lawmakers and industry players. The petition's success also reflects a broader trend in public sentiment toward crypto regulation. In many countries, governments are struggling to balance tax revenue with the need to remain competitive in the global crypto market. South Korea's experience is a microcosm of that challenge. If the tax is implemented as planned, it could have a chilling effect on the country's crypto market and discourage new investors from entering the space. On the other hand, if the tax is scrapped or revised, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. It could help stabilize the market and restore investor confidence. The next signal to watch is the Finance and Economic Planning Committee's official response to the petition. The committee will likely hold hearings or consultations to gather more information before making a decision. Any indication that the tax is being reconsidered could have immediate effects on market sentiment and trading activity. Until then, the uncertainty remains. Investors and industry stakeholders are watching closely to see whether the government will take a more flexible approach to crypto taxation or stick to its original plan.